Hello traders, Nick Shaheen here, doing a rapid fire. This is something I used to do where I run through as many tickers as I can. I try to concentrate on some stuff I usually look at, and then I probably goes random. So we'll start with FANG. This is the FANG gang, not the FANG stock. So this is Facebook, Amazon, Netflix, and 2 Googles in there. I bet you if I add Microsoft, it'll probably look the same. So today is 9/10, September 10th. Yep. They had a bad day. This was the day where Google got under fire from the AGs. Ridiculous. They're being ridiculous. And it was flat for the day. This is a bullish statement for Google. All of them were going after it except, surprisingly, California and some other state on the East Coast. I can't remember who. So what now? I think it's an individual thing now. They do trade in unison, kind of like in waves, but today also Facebook came under fire. It was up and down out of the blue, probably from an Apple headline, believe it or not, which is pretty ridiculous. Facebook is a monster, so this is Facebook. So speaking of Facebook, let's start there. Stop jumping around. So this is a daily chart for Facebook. I can talk it up and down from here. It's pretty high for the year. It has a lot to give back if it wants to. It looks like there's a little gap here to close. Probably falls down to 181.82 to close it. Eyeball will go closer. If it loses 176.5, it could retest 164-ish. Why do I say ish? Because this area right here where the cursor is, this is the point of control for this period of time. So we're talking all of almost year to date, maybe a little bit longer. So what does that mean? This is where the actual fight happened between bulls and bears the hardest. And if I look at it visually, this is the middle of the range. So let me see. So we'll bring in and mark it up. If I look at Facebook range for this period of time, if I slice it in the middle, that's where it's going to be. It just so worked out that way. And look at this. This was resistance, failed, a breakout, was delayed until here. Boom, above it. They held support, and they finished the job. So are they doing this to finish another job higher? I say yes. If the markets are higher, this guy's going higher. But also, you could look like it's doing some sort of a head and shoulder where it's trying to set a neckline here and maybe a bigger neckline here and then go to here. So is this possible? It is possible. Am I a buyer down there? I am a buyer down there. So I'm a buyer on every dip. It depends on the portfolio and the time frame I'm looking at. But this is, so basically I can talk it. I just told you the pitfall, wherever it could trip up. This little white line, this little red line, but the big one is 176 and change. Below it, it could probably come down here. Will it find support? It should, because of this, and it being the point of control. As it comes down to here, whoever fought over it, and it's a lot of people, a lot of machines, then they'll fight over it again. That is support that allows people to get out. The 5-year look on it is just easy trend to ride. It's an advertising monster. If I look at the monthly chart, every candle is 1 month. So it's hard to short a stock that is this powerful. That's my opinion. All right, let's go to Amazon. Amazon, talk about hard to short a stock. So this is Amazon, and the trend, if you drew lines here at the tops, it pointed to here. And look at how it attacked it. And people kept shorting it, even here, shorting it. And then somewhere around here, Amazon turned a profit, and they said, whoa, you know what? This company's legit. We nitpicked it to death. It's not expensive anymore. Yet it's got a high PE, but it grows like crazy, and it's also profitable. No way to short it. So short term, it almost looks like Facebook, kind of a head and shoulders. Not really. What I mean by that, it's attacking a neckline. So if the neckline holds, it looks like a platform from which they jumped up. But here, it's consolidated. So I could argue that it could probably a resting phase before they finish the job lower. So it could be doing something like this. Totally okay. This is support. This is support. So if this fails, this will get tested. If this fails, they'll get to the job. They'll finish the job down here. Otherwise, Conversely, I should say, this is the range, the tight range. This is also a neckline to break upwards. And if they break through it, they're going to do something like that and higher. And then you go, resistance here, resistance here, resistance here. And if they break through, they can get to 2100 pretty quickly. I know it sounds crazy, but this is Amazon. It does crazy things, so I'm not going to short it. All right, Netflix. Oh, gosh. Today, Apple came out with Apple TV Plus. Boom, Netflix fell off a cliff. Let me see here. 2 minutes? Okay, so this is the day was going on, and then off a cliff. Disney did the same thing. Off a cliff. And the Apple folks announced $5 monthly for TV Plus, Apple TV Plus. I can't imagine what kind of crap they're going to produce at $5 a month. And it's not per unit, it's per household, per family, I think the way they worded it. So I don't know what Netflix spends, I'm going to say $18 billion a year on content. How are you going to compete by bringing content that entices people away for $5 a month? Disney can, because they already have a huge library and they can produce them like this, and they have fans already of everything they produce, so it's just a matter of cranking them out. Apple needs to spend money on content, and $1 billion here, $1 billion there is not going to cut it. They're going to have to cut deals like Netflix used to do, off balance sheet books, off the books basically. I don't know how, but they're going to be creative, I guess. I think they can all coexist. What I'm saying here is, I'm not saying that Apple's going to fail. I'm saying that Apple's not going to take away subscriptions from Netflix. They can exist together. $15 here, $5 there, that's $20. Both can be happy. So I'm basically saying I would buy the dip in Netflix. I'm not a proponent of, I don't like the fundamentals in Netflix, okay, because they spend too much money and they bleed too much cash. And if cash wasn't cheap, borrowing, this company and Tesla would be in trouble. So this is a daily chart. This candle right here yesterday, Monday, was indecisive. This candle is kind of indecisive, and they tested a low from 4 days ago. So this could be good news. The bad news is that it could be the start of this, but the good news is that they still closed at or above the line. So trigger technically probably not there. They're fighting for it. That's what they're doing. So I look for potential upside triggers at 297-ish and 301.5. But the important line is a moving target. So if I see Netflix at 308-ish, it's a moving target. It's going to swoon. Above it, they can catch a bid, and then the dips will be bought. So the range will go from the sellers to the buyers. Right now, the range are with the buyers. Every pop is getting sold. Every pop is getting sold. That's why you see the lower highs. But then if you establish a bottom, a trough, then you break the momentum, and then you start building higher lows and higher highs. So that's how it happens. That's why you get this wedge. Lower highs, and then you stop making lower lows, right? That little red line right there. And if that red line holds, then those lower lows will stop and flatten out and then become higher lows. If you still make lower highs, then they come to a pinch, and then the wedge breaks up. So what I'm saying is I'm not giving up on Netflix now. In fact, I went long it a little bit via some tricky things I did. So that's Netflix. Google, I'm going to refrain from saying anything. This company cranks cash. I worry about it from Facebook because Facebook is becoming a monster. Look at this candle, though, yesterday's candle. It completely engulfs this candle here as far as tails. So today's candle was flat on a bad day. It's in the news all day. I'm not an expert on NR4s or anything. It's a collection of tight candles. They're going to break up. So if I draw a box around basically the edges of this candle, 1220 I'm going to round, and 1193 I'm going to round. A break of either of those will carry momentum in that direction. So 1220 plus, they'll retest 1239, 1240, where there was a big fight right here. So 1220 gets us to another fight around 1240. Below that, will get us a fight around 1160 to 1150. One thing to note is 1189, 1190 is point of control, meaning it's a point of interest of bulls and bears. And again, if I split this distance here, it's about halfway. So they fell this much, they recovered half. A complete mess around the earnings. So it's a place where it should have support to build from here. So if the bears couldn't sell it on the day where the news was bad, then every dip should be bought. So they're buying the dips as opposed to selling the rips in the Netflix chart. Okay, so this is FANG officially. Now we're on to Microsoft. Microsoft was way too expensive, and it was today, the last few days, it had bad days. Now this is where the intestinal fortitude of those longs comes in. These are weak hands, but they had time to consolidate, so I'm not sure how weak they are. If the markets are higher, Microsoft is higher, but I do worry about the bottom from today, 135-ish, the bottom from a few days, from last couple of weeks, 132 area, let's call it 130, yeah, 132. This one was a first leg in the breakdown, but then they quickly reverted. So 131, 132 depends on the appetite for risk. They're good places, good chances of holding, but then the question comes, how strong are these guys and gals? They could be strong because of this consolidation beforehand and this consolidation above it, so I don't give up on them easily. If the markets fall, yeah, they'll price out pretty quickly. So Microsoft, if I'm long, I'll pick my exit point. Let's put it this way. The closest one would be this one right here. Let me give them down to hour. Maybe we'll get smarter. No, 135-ish round number would be a place where I would say, okay, bug out moment, because that looks like a head and shoulder-ish. So let's talk it out. I can't draw lines today, I'm sorry. So it's a neckline, kind of, and if they do this, they attack the neckline, they're going to fall. How deep? They're going to test this one and this one. Technically, I think they should fall a lot more, but they're going to try to stop in a couple places beforehand. That is Microsoft. So let me see if we can come up with a couple more tickers. Got to talk about gold. I've been on record sharing my bearishness for gold when it was rising. The bulls are too comfortable, way too comfortable. So they're getting punished here, and tomorrow is going to be an important line in the sand for them because they're still in control, believe it or not. If you consider the daily chart, the reins are still in the hands of the buyers. When will that transfer? Soon enough. 139-ish is a pivot area for me, and all because of this candle right here. And that day, I shorted silver, I shorted gold, and the gold short worked, the silver short didn't. It did, but for like a minute, because that day, let me switch over to silver. They're kind of going together. So that day, I shorted it based on, hey, it's going to come down to 1550, and it was up here. It did, but it for like 15 minutes, maybe. So it filled the gap. It took away, the market makers flipped the risk. It took away the need to do it again, and it just took off like a rocket. So I lost a little bit of money on silver short. But the gold worked out, the TLT worked out, and the gold and TLT this week really worked out, the shorts in those two. Silver is still a meh. You know, it's just a thorn in my side. I can't get rid of it. But for the same reasons, silver should be a short as gold, as bonds, because the longs in them were too comfortable. They were up here, everybody saying gold is going to 2,000, silver is going to bazillion, 22. I can't tell you how many times I heard it. Everybody agreed, and that's when problems happen. When everybody agrees, when people on CNBC, I don't know, they come out and say this is the thing to do, that thing is done. That run is done. So it could bounce tomorrow. Draghi talks on Thursday, so I don't know about that. But I tell you one thing, I'm short all three. Whoops. And they're paying. So silver, this is bonds, TLT, specifically the 20-year bond. So as yields rise, this should fall, right? And it has been. Up here, everybody agreed that bonds are going to the moon. TINA, they repeat it. Well, TINA works for stocks better than bonds. TINA is acronym for there is no alternative. When money is paying negative yield in abroad, like in Europe, so if there are people in Europe that want to buy bonds, they are forced to buy U.S. bonds and U.S. stocks, because bonds will yield the 30-year barely above 2%, the 10-year 1.5, 1.6 at best. So they're guaranteed that little money. But the stock market right now, year to date, is 15, 20% up on the year. So they would have made 5-6 times more money just being in stocks rather than bonds, U.S. bonds. And they would have been guaranteed losses in abroad, in ECB, like in the Bund, in Germany bonds, for example. So level 1, check. Level 2, check. Level 3, question mark. Those were 3 levels I was interested in. And this one, the reins are handed over to the sellers, in my opinion. So what does that mean? If it has a bounce, I bet you they'll sell it. So on bounces, people who are long will say, thank goodness I can get out with minimal damage. And it's likely to do that. Having said that, this was a pivot zone, so they could hold the line, but I'm still holding. The short is working, so I am not panicking out of it. I'll wait to see 139, 138, and see what happens there. Okay, so that was TLT. Back to gold, which is what we started with. This was the goal, and it's pretty close, and I'm waiting one more candle. I hedged my short a little bit. What does that mean? I'm long a put. I bought a put out in October at 142. So that put is well in the money. It's very profitable, more than a double. So I sold some puts shorter term against it, but lower at 138, I think. So now I'm in a called a diagonal. So if it goes to 0, I'll still make money, but my profits are capped. But if a few days click and it doesn't fall out of bed completely, then that put I sold will be extra profits, and I'll still be short. So I basically locked in some profits. So this is the GLDs. I have no reason to exit today. Let's put it that way. And silver, I still say it has a date with, I'm a 16 and a half, 16 and 15 and a half, but I'm leery because I've been wrong on it. I was right for 15 minutes and then I've been wrong since. But theoretically from the charts, it should be lower. It doesn't make sense. Today it was green while the other ones were falling. It just doesn't make sense why it's up. It's like it's almost manipulated, and it could be. The ETF, this SLV ETF trades really weird. So tip, if you ever trade that ETF, only use at the money or in the money legs if you're buying them, for example, because then you guess right and you just make no money. You lose money because you buy a leg that's a little bit away and you guess the right direction and it doesn't get there. It gets a little bit short of it. So, okay, let's find another ticker. So the yield curve. This is inversion, that red line. Anything below it, they bounced off of it. That's not an issue. Nobody's talking about it. That's basically it. I think this is the Bund. Yeah, the Germany bond. So the yield there are also rallying, which, by the way, this will completely change in 2 days when Draghi talks. I don't know what they're expecting from him. He's expected to do a bazooka. So these are the small caps. This is the futures contract on the small caps. They've been champions. The stock market today, when it was struggling, the small caps were up 1%. Often enough, they move first. So I'm long the IWM, extremely profitable in that lucky call that we did, and I shared it. So I'm staying in it. I did hedge a little bit, and then I got hedge remorse immediately. But I'm hedged a little bit, meaning I'm short a little bit short term, but I'm a lot longer long term. So if it goes to the moon, I'll be very happy about it, and I'll take the loss on the hedge. Not a problem. I don't know if any of us look at Bitcoin. Nah, nothing to say there. So if you wanted to see it from the SPY perspective, so this is the daily SPY. We traded in that red box for a while. Ping pong, bang, bang, bang. Headline, Trump retaliation from China, then the Trump tizzy, just to give you reference points. And then boom, last week. And we have higher lows continuation. But we are attacking all-time highs. So people say, oh, things are so bad. Well, if things are so bad and we're still this close to all-time high, it's like when you're watching a sports event and there are two teams fighting and the game is tied and everything is going one team's way. All the fouls are being called for it. The umpires are trying to help it out. It's hitting the backboard in their advantage. The sun is in the other guy's face and the wind is in the other guy's face. And the game is still tied. Odds are that team who has all the help is going to lose the game. That's my opinion. So what I'm saying is, here are memes that people say. Don't fight the tape. Don't fight the Fed. Don't short a dull market. Now, I'm going to put an asterisk on this one. And people are saying it's a dull market. I hear experts on TV because, hey, for the last year, the markets have done nothing. Yeah, true. If you look at that, we were at all-time highs not about a year ago, and we just got over them. So yeah, on paper, it has done nothing. Meanwhile, we traveled thousands of points to get to nothing. So if by their definition this is a dull market, why the heck are you shorting it? All the central banks are pumping money into it. China and the US are the only thorns that really count right now. And the rest has been going on for a long time. Everybody's employed in the US. The consumer is spending like fools. So you're fighting the Fed, you're fighting the tape, you're shorting a dull market. The economy is still pretty healthy in the US. ECB is trying to make it healthy everywhere else, and they're committed to dumping all kinds of money and QEs into it. What are you shorting? That is my question to those who think that we're going to. We need a new shoe to drop in order to short a lot more than this. Anyway, this long enough. The Qs, yeah, I won't talk to it. It's about the same comments as the SPY. Let me see here. Oh, VIX and VXX. Okay, fear. Not this one. Fear. I'm going to use the VXX. It's a derivative of the VIX. Okay, so I'm going to go to 60 minute. All right, so you can see fear is falling off a cliff, and it lost the level that they fought. Hard to keep. The point of control is down here. So this is where the heaviest fighting happened. So this rally can continue in the stock market because the VXX can still fall, and the VIX itself is under 16. It's barely 15. So it fell under 15, I think, today or last couple of days. So itself is not anywhere where anybody's worried about much. So this is 2-hour candles. Okay. Let me see if I go to the daily. Will that give us anything? So here's the daily 1 year worth of VIX. Spike, and we're still at all-time highs. So I really am not. I want to say the VIX should be higher because of everything that everybody's worried about. But I think the fact that everybody's worried about everything, the VIX has no reason to freak out until, the crap hits the fan, so to speak. Until, some currency folds or, I don't know, some, God forbid, terrorism attack somewhere. So we need a new shoe to drop to change the game. What we have here, risks and all, is basically priced in to the fear. We need a new one. So you think that this was pretty high, right? The VIX was 90. This is 35. The VIX was 90 in 2008. If you don't remember, that wasn't it. Okay, that's 2008. Okay, so 96. This is today. This is since 1999. So they tell you the average of the VIX is somewhere around 20. I say it's a misleading statement because it spends more time lower than these spikes skew it. You would need some sort of a weighted average to consider, that maybe it's a one tick at 20 or at 50 that skews the average kind of a deal. You can't, or throw out the outliers, the extreme highs and the extreme lows. I don't know. But mathematically, yes, it may be correct, but it's saying the wrong thing. It's saying that most of the time the VIX is worried about things. It's not. Most of the time it's not worried about anything. Like these are most of the times down here. So anyway, my statement, not a fact. Nick signing out. If you need any tickers, let me know.